What to do when the market is at its peak? The dilemma among the investor is whether they should book out or let the profit ride. So let's understand the scenario, and for each scenario let's understand what one should be doing. So let's begin. Scenario 1 is for companies that are great. So these companies will keep on growing their profits, keep on growing their sales, will keep on dominating the market. And so what you should be doing when the market is at its peak is forget these companies. If you keep looking at them, you will be tempted to book profit, and this is when you will regret that you have booked out very early. Valuations might not be in favor of your companies or in favor of them, but it's better to forget the valuations and let the profit ride, provided they have the good ROC, the sales growth is coming and the profit growth is coming, and it will continue as well. Scenario 2, not so great companies that had some profit growth, that had some sales growth in the past, but they will not be able to continue the same speed of profit growth or sales growth in the foreseeable future. So if that is the case, you should be slowly but surely booking out of those companies and keep the profits handy for the next market correction when you want to deploy them. Again, you should not be booking out on a single day. Do it in a staggered manner so that it helps you even get the profit rolling as well for some of the percentage. So you can decide to do it 10%, 25% per say 10% rise. So you book out some right now, then for each 10% increase in the share price, you keep on booking out of those such companies, because the valuations may be very high now for these companies and they may not be able to deliver the kind of expectation that the market has. You could be wrong as well, but you have to take that educated guess, and do not regret if you have classified as a company that will not be able to grow the profit, and you assumed that and it keeps on growing. So there will be some mistakes and this will be a learning experience for you. Scenario 3, there are certain types of companies that don't have any fundamentals to back, and they are just going higher because the market itself is going higher. And you should be coming out of those stocks as soon as possible, or even if you're not coming out of them right away, then the best thing to do is to have a stop loss, 5%, 10% correction from the current levels, and that is when you would say enough is enough. This is the approach that I am following, and generally I have come out of the third category very soon, and there are no companies that I would classify in my portfolio as category 3, but definitely scenario 1 and scenario 2 type of companies were there in my portfolio, and I'm shuffling them and moving from say slow growers to fast growing companies, the companies that will be able to grow much faster, have a valuation comfort for me, and that is how I am churning my portfolio. I have been doing this since November or October also as well, and so it is helping me generate that alpha that I want to generate for my portfolio. Hope it helps.